Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate, with host Glenn Sutherland.
Welcome to another episode of A Canadian Investing in the U.S. This week, our special guest is Ali Ajami. This week, our podcast is going to be a little bit different than normal. I've had a lot of people write into me just with questions related to accounting and structure and that sort of thing. And instead of trying to answer them myself, I just got my CPA on the phone, and we're just going to pop through. I'm just literally going to read the questions that I've been receiving, and we'll go through them. If you guys have more questions, at the end of the episode, Ali will put his contact information up, and then we can contact him and see if it's a good fit that maybe you guys can work with him, just like I do, or you can just ask him a question. Well, besides introducing you as my CPA, is there anything else I should introduce you as, Ali?
I probably not. No, that's really about it. You know, we're pretty boring, other than we do have a social life. I'm married. I have a daughter. I have a son on the way. My wife is doing, thank you so much. My wife is doing August, so we're anticipating that arrival. And, my company is Global Tax Services. I have a partner, Brent Green, as well. Unfortunately, he couldn't be on this podcast interview. He's traveling, but hopefully in the future we can definitely get him on.
Definitely, yeah. So, Ali, what's the difference between an LP and an LLC?
Well, the difference between the two is, specifically for Canadian investors, we do not suggest the LLC structure. And the main reason is because Canada, unfortunately, does not recognize an LLC as a pass-through entity. And this results in, on the Canadian side, while filing a Canadian tax return, you do not get credit for the U.S. taxes paid for that year. So with an LP, you do get that credit. So that's the biggest thing right there.
So basically that keeps you from a double tax, right?
Yes, definitely. It keeps you from a double tax.
Why do Canadian investors need CRA implications?
Well, this is a commonly asked question. So what I would say is there are significant differences in the treatment of certain items for U.S. and Canadian purposes. The biggest one is depreciation.
We actually have it's just what I've found because I was talking to a Canadian accountant is we have a depreciation here, but it's a different schedule. Yours is 26 and a half years, and ours is
27 and a half.
27 and a half years. Yeah.
Okay.
And ours is a longer schedule, so we don't get to write off as much. So it has to basically be done in the states at one rate and then done again in Canada at a different rate. Sorry.
Good. Okay. No, that's good to know.
Yeah.
Like I said, to my knowledge, we didn't think it was allowed, but that's great. And
like
I said, it's 27 and a half on our side. An individual also can be subject to capital gain tax in each country as well. Very few people are qualified to advise on both countries' tax laws, which, we can definitely do that moving forward. What's generally allowed is a tax credit for U.S. taxes paid on a Canadian tax return. That goes back to now structuring the actual LLC.
Now, do you expect investors to be paying much tax in the States anyway?
No, not really. At the end of the day, there's no specific percentage that I can give you because all the deductions that are going to be occurred throughout the year, and then obviously the depreciation. But from my experience, it's not going to be much.
Yeah, that's what I understood too. It'd be very little to nothing until you have at least a lot of properties and generally a lot of
exactly. Yeah, there is no tax liability, so
Yeah.
we don't have anything to worry about.
Yeah, what I've found is that any tax liability that could come, which it hasn't for me yet, will be in Canada because we're going to be having a lower depreciation schedule, so we'll be able to write off less every year, and
correct.
And so it'd be almost like the properties in Canada. The real difference I've found is just you just have to have a couple extra setup fees at the start, but it's easily outweighed by the amount of money you can make in the States. Whenever I first started talking with you about a year ago, or I guess last year, you kept saying that an LLC is a flow-through. Would you be able to sort of describe what a flow-through is?
Yeah, so you want to know exactly what a flow-through entity is?
Yeah.
Yeah, so the flow-through pertaining in an LLC is really where all your expenses are flowing through that actual LLC, where in other cases you wouldn't be able to flow them through and get the actual deduction and credit for all the expenses that are going through in whatever type of business you have chosen.
Yeah, so it just basically flows through onto a personal tax return. It's not like you would think like a corporate tax return where you're filing corporate taxes and you're paying like a corporate rate. It just flows
then you're
through
just
to your
paying
personal return.
Yeah, where you're just paying a corporate rate just on that tax return, where the flow through is going from the LLC onto your personal. The bottom line, which is if it's going to be a gain or the loss, is going to be thrown onto your personal tax return.
Yeah, so if you were an American, it could actually help your tax implications for your W-2 or your T4 income.
Oh yeah, definitely.
When would a Canadian need to file taxes with the IRS?
Okay, so in this case, it's going to be obviously, I'll give you an example. You have activity flowing through 2018, any income, expenses occurred, and then we're going to go on to 2019, the tax filing period. Every year they kind of change it, give or take 2 to 4 days. So let's say it's January 28th. That's when we would be eligible for tax filing for the previous year. So bottom line is, if you occurred expenses or income the previous year, the year that follows is when you're required to file a tax return. And it's not necessarily, we don't want to quote it as a Canadian needing to file. It's anybody receiving U.S. income or occurring expenses.
What I'm curious about, what if someone wasn't buying those at all? What if they just put money into a syndication? So they were loaning money to some apartment investor in the States. Would they still need to file with the IRS, or is that could they just skip that step and go all the way straight back to Canada?
Well, it depends. If they're investing in something in the United States and they're receiving income, definitely.
Okay.
Yeah, if you're receiving income from your investment, of course, because it's going to end up being income to that person, and then that person is going to have to document it with the IRS. So basically, you're going to have to file.
A little bit of change of topic, but why would a CPA be advisable?
You know what? I always get this question. It's with this type of business, international investing, I would think it's more of an international tax expert, which, our firm, we have CPAs and international tax experts. A CPA is more advisable than just a regular, accountant when it comes down to the certification. We can sign off on more things than an actual accountant can. But the biggest thing is the certification. Yeah,
and having someone who understands the Canada, U.S., the laws and the taxes and the LLC implications, I found is very important, because when I was initially just searching for accountants and people to set up my LLCs, there are cheaper ways out there to do it. but then you're going and getting one piece at one place and one piece at another place, and
Yeah.
you're talking to some people who know about Canadian stuff and some people that just know a quick, cheap way to set up an LLC. And I've gotten just someone's handed me a pile of paperwork here. Just follow these instructions and you can set up an LLC in this state. And, and you're like, for real estate. And you go, oh, well, that sounds great. It's only going to cost me, whatever the filing fees are the state's asking for. But you're like, but geez, you would have set it up wrong. You wouldn't have the partnership part of it. You would have ended up getting double taxed.
Yeah,
and
double tax.
And I think a lot of it is just to find, when you're building your team, is to find someone who actually understands the situation you're in. Even if I do my bookkeeping myself, but if you end up using a bookkeeper, just to use a bookkeeper or someone who actually understands real estate instead of, just being a bookkeeper, right? Because it's different, right?
Definitely.
Yeah.
Yeah, it's different. And we pride ourselves in, in the knowledge that we know on the international side. So, like you said, it's one thing. You could go open up an LLC, do a partnership with, any types of these structures online yourself, and they'll walk you through it. But at the end of the day, you don't have that backup knowledge that you would in somebody like us or, anybody else, any other CPA/accountant. And then, it's just, it's a peace of mind where, if you're unsure of something, you can always pick the phone up, shoot an email. Am I doing this right? Am I doing that right? I want to invest here. How do I go about it? So definitely, that's why it's advisable.
It's not worth it to save the $100 or whatever to do it yourself and then find out it's all wrong.
No,
you owe so much money and everything's gonna cost you 3 times as much to fix. This is another question I had from a listener of the show. For someone who wants to buy multifamily, long-term buy and hold, what's the best corporate structure from 2 viewpoints, for liability and for taxation?
Okay, great question here. Yes, this is always asked as well. I would recommend a 2-tiered structure wherein a Canadian corp owns a U.S. corp that then owns the real estate. So let me say that once again, a 2-tiered structure where the Canadian corp owns the U.S. corporation, and then the U.S. corporation owns the real estate. The stock in the Canadian corp can be transferred with anonymity and no estate implications will occur. Also, this allows distributions at a max percentage of 5 in the U.S. is structured correctly, rather than a distribution of a typical rate about 15%.
Okay. So when does that make sense to go to something like that? Because I'm doing all these single-family homes. Is it, I guess when you hit a certain amount of money you're making or a certain number of properties that it makes sense to go to something like that?
You go to that structure when your portfolio grows, or if you have more than 2 partners, and then you want to just set it up keep it in a corporation. That's when it would be advisable to pretty much go that route.
Would that be an expensive transition, like for me in the future, just to get rid of the LLCs and transfer the property, or would it just be basically set up fees for the Canadian Corp, the American Corp, and then just do the title transfers? Is that or what else would be involved?
Yeah, pretty much that. Pretty much setup fees. To get rid of the actual LLCs doesn't really cost much. You could just let them dissolve, or if you want them to dissolve right there and then, there would be a fee there. But you can have them dissolve over a 2-year period by themselves.
Here, I'm going to read another question I got from a listener. My question for the accountant is related to filing income taxes. Do I file in the state that I purchased the home as well as in Canada? Do I also include the revenue from the rental income in the same way?
Yeah, well, you're definitely going to go ahead. You're going to have to file a tax return in the state. So obviously you file a federal, and then you're going to have to file a state return if that state requires you to file, because there are 9 states without state income tax, which include Alaska, Florida, Nevada, South Dakota, Texas, Washington, Wyoming, New Hampshire, and Tennessee. So to answer your question, if you have a property in a state other than those 9, you will be filing a tax return. But if it's in a partnership, there's some partnerships that don't have state returns. And, if anybody has any further questions regarding that, we can get into further detail.
Now, would it make sense to just set up your LLC in one of those states, even if you're not buying one of those states? Would that save you any money, or is it actually any different at all?
If you're looking at it from a tax perspective, but and we've had this conversation, myself and you, before. Yeah. So we suggest in the beginning you open up an LLC in the state that you purchased the property for liability issues, and not having any conflicts, and your property's in Michigan, the LLC that owns it is in Alaska, and then assets can become, if ever sued, assets in Alaska could come after the assets in Michigan. There's no liability coverage. In the beginning, we definitely suggest to open up an LLC where you're investing. But as you get bigger, then we could structure it where there's like an umbrella and there's liabilities for or insurance for each property in different states and LLCs.
Perfect. I'm going to actually try and combine 2 questions from 2 different people who emailed them in, but basically they're almost the same question. But it's the pros and cons of an LLC versus a trust or a cross-border trust.
Okay. Yeah. So like I said, the biggest con with an LLC is it's not recognized as a flow-through. So there's no tax credit granted on a Canadian tax return for U.S. taxes paid. So there's double taxation.
Okay.
Pros, as a Canadian with an LLC, there aren't much, because that's the biggest con right there that eliminates a pro.
Yeah.
So a cross-border trust is really necessary when the portfolio exceeds the U.S. estate tax limit, which is now $11.2 million per individual, because it's favorable to U.S.-Canada estate gift tax treaty. So there's a tax treaty that's between the two countries, and it's favorable, like I said, towards U.S. and Canada.
So if you're not up in the $11 million worth of income from real estate every year, you don't really need to go there yet?
We wouldn't even suggest to go there yet. Yeah, but then when you get into that range, then we can cover a cross-border trust.
Would a multi-tiered structure be better and simpler as an approach? Or is that something, like, I think we kind of covered that, where you sort of, it makes more sense as you get more properties, that off the start it doesn't really make sense. That's kind of where we're going there. If the intention is to buy and hold, or an investment is relatively small, it may not be cost effective to create a 2-tier structure. So, I mean, that would be a suggestion. Yeah. What would be the preferred structure if we were setting up a joint venture where all the partners reside in Canada?
That's a great question. If the intention is to take cash distributions each year, then the LLP would be my choice. But also, if you buy and hold, I would consider a corp. With the flat rate now, with our new tax law for corporations being 21%, it now makes this viable. It makes it a viable alternative. There is no one-size-fits-all to this situation. Structure depends on the investment amount, time horizon, makeup of the investment group. The more complicated the structure, the more professional fees will be paid. So that's something that's going to be that has to be taken into consideration.
So you're saying, like, it's back to the same sort of thing where you'd have the Canadian corporation and the U.S. corporation. Is that what you mean? Yeah, pretty much. I was just thinking for my own real estate. So say I bought a property with another, someone else who already has doing the exact same thing as me. would it be advisable for us, like for title, to have, like, say my LLC and their LLC on title? Or would that make sense, or would it make more sense to set up our joint LLC than just basically start over?
You know what? It depends.
Okay.
It just depends on the person. If you're a partner with that person, you guys have a good operating agreement in place, then I would say just the one entity structure. But if you guys are both worried about your assets and it's somebody that you're going into business, but you don't trust them as much, I would probably just, for double coverage, go each one of your LLCs you can do.
Okay. What would be some of the startup costs for these structures, like just to set up an LLC, and what would be the ongoing costs of these structures?
The costs are dependent on what state you'll be opening up your structure. Those fees vary because of state fees, so on and so forth. But I'll give you an estimate anywhere between $500 to $800, like I said, depending on the state. Then the ongoing cost is it's always going to be a yearly fee, about $125 to $150. That includes registered agent fee. What I mean by registered agent is all the mail will be coming to that resident in that state and then passed along to yourself. And that also includes the annual renewal fee to the state. Then to file, we typically charge $575 per tax return. And then if it is a partnership, you would have a partnership tax return, and then you'll have your individual tax returns that we typically cut breaks for. And we'll charge an additional like $175 to $200 per individual tax return. But one thing that I should note, we are certified acceptance agents with the IRS that assists us in streamlining and being able to obtain ITINs for foreign investors. What is an ITIN? It's an individual tax identification number. It's equivalent to a Social Security number in the United States. You need this number in order to file a personal tax return, which is called a 1040 NR, non-resident return. And it's a one-time fee of $425. This needs to be renewed every 3 years, and we also hold that service as well.
Yeah, and I should mention for people who don't know anything about ITINs, it's also required if you want to get credit cards, loans. It's a handy number that you can use on a lot of the paperwork instead of a Social Security number.
Correct.
For someone who's starting fresh off, hasn't bought anything in the States, what kind of things they need to set up first? I know, like, we just talked about the ITIN, the LLC, I guess a bank account. Is there anything else that they would need to get set up before they went and put an offer on a property?
Well, honestly, the main thing would be opening up a structure. Like, you wanna get a structure going, then purchase your property, or just do it all at once, because the majority of the time you're going to be purchasing the property in your structured entity.
And what kind of time frame does it take to set the structure up?
You know what? That all goes back to the actual states. Some states take longer than usual. So I'll give you an example. Michigan, they've been basically taking like half a day lately. They moved to an online service program, which in the beginning had some kinks. They got that together, but then you have a state like Texas or Alabama that's going to take about a week and a half. So it just depends on the state.
Well, thanks very much for your time, Ali. What I would love all the listeners to do is, if you have more questions or even elaborate on these questions, send them to Ali, but also send them to me, because if you have the question, probably somebody else does, and maybe we'll get Ali and his partner to come on another time, and we'll deep dive whatever is left over for questions that people had off of this podcast. Maybe we'll, in a couple months or 6 months or something, we'll come back and revisit the whole thing and see if there's, we just want to provide as much information as we can for all of you. Ali, if people wanted to get a hold of you, maybe you could give some of your contact information.
Yeah, definitely. If you guys would like to get a hold of me, please email me at aajami@gtservicescpa.com. We also have a website at www.gtservicescpa.com. And you guys can give me a call at 313-395-3113. Ask for Ali, Ajami, or Brent Green. We are open, basically 24-hour service, whatever you guys need. We'll get back to you, and looking forward to speaking to anybody that has any questions.
Perfect. Thanks for your time. You know what? Actually, maybe I should mention my contact information. But if you want to get a hold of me as well, it's Glenn at glensutherland.com. So it's Glen, one N, and Sutherland. But yeah, send questions over. I'm always open to get on the phone and have a conversation, or even if you're in the Cambridge area or within like an hour of there, I will go meet you for coffee. Thanks, everybody. We'll talk to you next week. Thanks for tuning in to another episode, everyone. Next week we have Raheem from Knightsbridge FX coming on the show. He's going to speak to what's the future of our dollar going to hold and what's influencing the dollar right now. I hope to see you guys next week. Thanks.